Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today. We have a full show, and we are going to be talking about so much stuff. You might want to be taking notes, or if you miss any, you might want to turn around and go listen to this as a podcast if that's not how you're listening to it now, because you may need to rewind. Yeah, there's that much stuff. Hey, listen, before I forget, I want to thank our good friends at the Insurance Consumer Guidance Society. They are the sponsor for today's show. We would not be able to be here if it were not for them. Visit icgs.org, find out what they're all about. They are a nonprofit. Their sole purpose is to help you understand your insurance policy. We thank them at ICGS for their support. Let's jump right in. One of the things that we forget to do every year or so is check on our insurance, right? I mean, how often are you really sitting around and thinking, when's the last time I thought about my insurance policy? Chances are never. Well, let me tell you, that is at your own peril, because even though some insurance policies are designed to change with time, to have coverage increase or things of that nature, for the most part, it is buyer beware. It is consumer be alert. You need to know what it is that your insurance policy may or may not still cover. Let me give you a few examples. For one, you might be in a situation where you have a homeowners insurance policy where when you purchased it, the replacement cost was one number, but now that number could be completely off. It could be off by a lot. So it's important that you turn around and are checking to see, is your insurance coverage sufficient? Meaning, do you have enough coverage on your homeowner's policy? That's one example. Another example might be something like your car insurance. Now, I remember a story. This is a true story. I can't make this up. I was talking to a neurologist at a large hospital, and we were talking about his insurance. He sent me a copy of it. I was looking at it, and I was shocked to see that he actually had state minimum limits on his insurance policy. And I said, are you aware of the limits you're carrying right now? And he said, well, yes, I've had them ever since I was in college when I got my car. And I said, well, there have been some changes since then. Number one, you're certainly worth a lot more than you were then, and you need to have more protection than you had then. So keep in mind with your car insurance that time goes by, circumstances change, and you might need to make a change to the limits you have on your auto insurance policy. Now, I know a lot of people hear this, they think, oh, more money. Listen, insurance is one of those things that, yes, you are going to be spending money, and you might not love it until you have a claim. And then it is your best friend. It is your best bud. It is, thank goodness I did this. Thank goodness I was paying premium all that time, because now is when the rubber hits the road. Now is when I'm really going to get the benefit from it. There's an old saying, it said, you never know the value of an insurance policy until you have a need for service or until you have a claim. And it's very, very true. You have to know that what you're doing today is going to help protect you tomorrow. So it is important to be sure that you check in with your insurance policy at least once a year. This is a good time to talk about it, wouldn't you say? Once a year, at least. Or there might be large changes in your life, your lifestyle, your finances, your family, other things that might make you think, maybe I need to be reviewing my coverage. And I know that's not what you think about usually. That's the sort of thing I think about because I'm an insurance nerd. But that's not what most people will sit around and think about. But I'm here to tell you, that's why you're listening, you do need to think about it. Let's talk about some potential things that might have changed that you might not realize would impact your insurance. Now, there are some obvious ones, like maybe you changed houses. Let's say you're renting, okay? Let's just say you're renting. You have a renter's insurance policy, or maybe you're renting and you don't, and you've always thought, what do I need it for? I don't have a lot of stuff anyway. Listen, renter's insurance is not just about covering your personal property. Most renter's insurance policies come with liability coverage. What does that mean? That means that you are carrying liability insurance in the event you are sued for some form of negligence. Then you would be able to put that claim into your insurance company to potentially get some defense. Now, again, you might be thinking, but I don't have any stuff. It doesn't matter. If you all of a sudden are sued because of negligence, because you have been the cause of something very expensive happening to somebody else, then you could end up having your wages garnished. You could end up being in a situation where you might be on the verge of declaring bankruptcy to try and get out of these debts that you might have. Let me tell you, litigation is expensive. And just because you're not a homeowner, just because you don't have a lot of tangible stuff, just because you might still be in school, that does not mean that if you cause some other individual or entity a loss that's significant, they are going to come after you. And just because you don't have the liquidity today, they can certainly do things tomorrow to be able to get money that you might earn that you don't even have today. Now, I'm giving you this little, drama speech because I've seen it before where people will say they don't have renter's insurance. If you look at the number of people that rent versus the number of people that have renter's insurance, you would be shocked, or maybe you wouldn't, I am, to find that it's very, very low. Most people just figure, I don't have a lot of stuff, I don't need it, and they move on from there. Forget the fact that, in the event of a loss, all of a sudden you realize that, I don't have a lot of stuff, but it's still going to cost me money to repurchase stuff in the event of a loss. Renter's insurance, one of those inexpensive policies, probably one of the least expensive types of property insurance that you can get. If you are renting, please get a quote for some renter's insurance somewhere. Check with your independent agent or broker. Go online, find someone, find somewhere. Don't go naked. I'm just telling you, don't go naked. That's my quick renter's insurance spiel for the morning. But again, we were talking about what is it that keeps... What is it that could change that all of a sudden you realize, now all of a sudden I might need to revisit my insurance? Well, obviously, like I said, one of them is moving. Another one might be somebody moving in with you. Now, in the last year, maybe you've gotten together with someone. Maybe they're living with you now. Now, all of a sudden, you might need to turn around and say, all right, if they're living with me, if they have their residence with me, do I want to list them on my insurance policy? And the answer is usually you would. Do they have any of their stuff with you? Meaning, do they have their things? What's the old joke? Do they have the toothpaste, the toothbrush, and the hairbrush? Are they a resident there? Are they there all the time? At what stage are you at? Things like that might trigger you to think about, what do I need to do with my insurance policy? Again, one of them is, who are you living with? If somebody new has moved in, that should be an immediate red flag. It's time to check out my insurance policy. Because again, you can't just hope that you'll have the right coverage. You need to ask, you need to know, and you need to get the coverage that you want to have in the event that there is a claim or a loss somewhere down the line. All right, listen, we're coming up on our first break. We just have a few of these. They're 60 seconds. Don't go away. This is Insurance Hour. I am Karl Susman. We are going to be talking about checking in on your insurance, and we will continue checking in on it and talking about it right after this. Be right back.
Insurance Consumer Guidance Society, ICGS. Independent, accessible, empowering. Educating Californians for smarter insurance choices. The Insurance Consumer Guidance Society, ICGS, is a 501c3 nonprofit organization dedicated to providing the residents of California with clear, unbiased educational resources about insurance. Our mission is to enhance consumer understanding of insurance products and the evolving regulatory environment, particularly in light of challenges posed by climate change and market shifts. ICGS provides comprehensive insurance education, public and media outreach, and direct consumer support. ICGS serves the public by fostering informed decision-making in a dynamic insurance landscape and empowers Californians with the knowledge they need to confidently navigate their insurance choices. To learn more about how we can serve you and find free resources, visit us online at icgs.org.
Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today, talking about my favorite topic, and maybe yours, insurance. All right, I know. It's not always everyone's favorite topic, but it is something you need to think about. And you certainly need to think about it at least once a year. You have to revisit your policies. You have to revisit your coverage. You have to look at it and see. One of the things I want to focus on in this segment specifically is replacement cost coverage for your home. Now, listen, we buy a home, we take out a loan, most people, and you're paying the loan back, and you have to pay for insurance on the home. Now, you understand that the reason that you are quote unquote forced to keep a homeowner's insurance policy is because the bank wants to have their collateral, the home, protected in the event of a loss. They understand how important it is, so you should too. So what happens once a year or so that you want to at least check on? Well, let me give you an example. When the fires in 2025 happened, a lot of homes had not had their policies looked at in a very long time. And what people found was that because the policy hadn't been looked at, they might not have had the coverage that they thought they had. Or even more so, they had the coverage that they believed they had, but it turns out that it still wasn't enough. Well, you got to roll up your sleeves and put on your big boy pants, because you need to realize, again, this is on you. This is something you need to take charge of and be sure that you check in and find out, do I have sufficient coverage? Now, how do you know what is sufficient coverage? Here's where it gets a little bit tricky. Let's say there is a fire and it damages your home. Now, you're going to have your choice of contractors. You'll be able to go all over the place, get bids, do whatever you want, get a bid, and it'll cost you X dollars. Let's just call it $1,000 for simple round numbers. But now let's say that same fire happens, but it actually takes down 4 or 5 houses on your street. Well, there's going to be, a little bit of a feeding frenzy with the contractors and the architects and everybody else. They're going to be scrambling. They want to get those homes rebuilt quickly. So it might cost a little bit more. Let's just call it, instead of $1,000, let's cost it maybe $1,400, right? Well, let's take another example like we saw during the 2025 wildfires. Let's say it takes out more than 10,000 structures. Now, what's going to happen when more than 10,000 structures are gone? Well, I'll tell you what's going to happen. There's going to be an immediate shortage of contractors. There's going to be an immediate shortage of architects and people that do the permits and people that actually do the work and the lumber and the labor. You name it, there's going to be a shortage, because we don't have that number of that manpower at standby to put together that number of homes, let alone that number of homes in a very finite, specific area. Well, what does that mean? That means that now the cost that might have been $1,000 or $1,400, it could be $5,000. It could be $10,000. Now, you might be asking, okay, now wait a minute. Are you saying that I need to have my home insured for that worst case scenario when absolutely every single house in my city is burned to the ground? My answer is that's up to you. You need to decide at what level are you comfortable taking risk. Are you comfortable taking risk for in the event there's a loss that is smaller in scope? Or are you only comfortable taking a risk knowing that you will have absolute protection no matter how catastrophic it is? It's a personal choice. There is a range. There is no specific number that you can always rely on and know, come hell or high water, you will have enough coverage, because it depends on the loss. It depends on when it happens. It depends on what else happens around it. But again, this is all back to the same idea. You need to take the time to look at your policy, discuss it with your insurance agent or broker, talk to your insurance company, and even more importantly, talk to people that actually do rebuilding. Talk to a contractor, talk to an architect. I know when you're not thinking about it, you're like, why do I want to go spend time and money? I'm going to go call a contractor to come give me a bid to rebuild my house. Come on. Yeah, you can. It's not actually that expensive, and it's really easy to do. You just want to get an idea of what it's going to cost. You might be very surprised to find out what they're saying it's going to cost to rebuild your home. It turns out that the estimator that your insurance company might have had might not be enough. It might be too much. You might be way overinsured. Again, you want to take your time to do your due diligence, look around, talk to the experts, because again, there is no magic number. There is no one size fits all. No matter what happens, you'll have enough coverage. I remember many years ago when I was taking a continuing education course, the instructor was an older guy. Wow, I'm saying that now. Anyway, he seemed like a much older guy at the time. He's probably what my age now. And he was saying, when there's a loss, there's never enough coverage. It doesn't matter how much coverage you buy, you'll always wish you had more. And it's an interesting way of thinking about things, because I can understand now, having done this for over 30 years, that there is this tug of war that goes on in everyone's mind and their wallets and their communications and their discussions with other people about what they're going to pay and how much insurance coverage they want to have. Because on the one hand, they don't want to pay a penny more than they have to. On the other hand, they want to be sure that they have coverage for absolutely everything, no matter what. And as you can imagine, those two forces pull in opposite directions. So at the end of the day, the decision is yours as the homeowner, as the person who has, again, in this example, the loan on the house, the person who is living in the house, that you need to decide based on as much information as possible, what is that value going to be? But I'm here to tell you, I am not aware of that value ever going down. Brings me to an interesting point I want to bring up. A lot of times people will say, well, I went on Zillow, or I went on Redfin, or I went on wherever online, and those are great sites, nothing wrong with them. And they're saying, well, the value of my home is X, Y, and Z, and I'm insured for a different amount. Something's wrong. We need to be sure that we understand that the market value of the home does not equal the replacement cost value of your home, because the market value incorporates things like the demand, how many people are looking to buy that home, the area that it's in, does it have a view? Is it in a desirable area? Is it out in the middle of nowhere where the less people want to buy it? That's going to lower the value. When interest rates are higher, sometimes it's harder to get loans. The market values will go down. But the cost to rebuild, right? There's nothing there. You're getting the contractor, the architect, and everyone together to start putting that house back together again. That amount, I've never seen that go down. It only goes up because things only cost more money, right? Nothing starts to cost less money. All of a sudden, they're not going to find a way where, hey, that tile roof is cheaper to build today than it was 5 years ago. No, that just doesn't happen. So again, keep track of when the last time was. Maybe put it on your calendar, put a little reminder in your notes app, whatever it might be. You want to visit your insurance policy, and specifically if we're talking about your homeowner's insurance policy, at least once a year. Speaking of which, guess what? One more commercial, and we will be back talking about it again. This is Insurance Hour, and I'm Karl Susman.
Insurance Consumer Guidance Society. Our mission is to enhance consumer understanding of insurance products and the regulatory landscape in which they operate, particularly in light of mounting challenges that many consumers have faced, such as natural disasters and significant market shifts. These factors have contributed to an increasingly volatile insurance marketplace across California. ICGS is there to help. Please visit our website, icgs.org, and help support the nonprofit that's there to support you. Through education, engagement, and direct support, the Insurance Consumer Guidance Society strives to be a steadfast ally and resource for California consumers today and in the future. Visit our website now to support us at icgs.org. Once again, our website is icgs.org. Insurance Consumer Guidance Society, educating Californians for smarter insurance choices.
Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today and learning about insurance. I know, your favorite thing, but a necessary education for you to have. So seriously, thank you. Pat yourself on the back for being here, for taking the time to learn about something that, look, you hope you never need to know, and you hope you never need to deal with these policies. But in the event you do, the little bit of time and effort that you put in it today, or as I'm talking about in today's show, at least once a year, will come back to pay you in spades. Now, before the break, we were talking about increased coverage, and increases in coverage to rebuild your home. That's not the only thing you want to pay attention to. Now, as I imagine, things cost more money. More coverage, more money. So what is it that you can do to try and go the other way? What if you want more coverage and you want to pay less money? Well, yeah. Thank you, Karl. We would all like to do that. Yes. Well, there are ways that you can do that. Let me give you a few of them. For example, you know about deductibles, right? A deductible is the amount of money you are responsible for in the event of a loss. It's basically you are an insurance company for that amount, and then the insurance company is the insurance company for the rest of it. How do you like that? Now, you can get a deductible that's a dollar amount, $5,000, $10,000, whatever it is. Or you can get a deductible that is a percentage of the coverage. For example, if you have $1 million in coverage, and you have a 2% deductible, then you would have a $20,000 deductible in the event of a loss. Makes sense, right? So deductibles are a huge way to save money on your insurance policy. Let me give you another one. Again, I know we're focusing primarily on homeowners policies right now, but we'll get to everything else. We talked about renters earlier. If you missed that, back up, listen to the first segment of the show. We did talk about renters insurance, how important it is, and some things to look into when you're purchasing it. Now, as far as saving money on your homeowners policy, something else you can do. Now, a homeowners policy tend to be similar. They're not the same. They're definitely different between companies and policies. But some of the things they have in common are they will take that dwelling amount, the amount of coverage you have for replacing your home, and based on that number, they'll give you other coverage limits. Okay, limits meaning only so much coverage based on that and as a percentage. For example, they might insure your home, let's just say again, for $1 million. And then they'll say, okay, and we're going to give another 10% for other structures. So in this case, that would be $100,000. Well, what in the heck is an other structure? Other structure is anything that is not attached to your home. Let that sink in. Not attached to your home. That could be a garage. That could be a detached little, what do they call them? Home for someone else, like a single room. It could be a separate structured dwelling altogether. Right? It could be a gazebo. It could be a pool. It could be anything that's not attached to your structure. You're going to have that coverage under other structure. Now, you might say, well, I just don't have that. I don't have anything that comes anywhere near that number. Well, a lot of insurance companies will give you the ability to lower from what they automatically give you that other structure coverage. Now, not all of them. Some will, some won't. It really depends on the carrier, but that's a place that you can look because it's already there. And if you don't need it, you need to check to see, do you have the ability to remove it? The next one to check out is personal property. That's your stuff. Now, this one is where it gets a little more tricky. Again, most carriers will take a percentage of that dwelling and they will give you personal property coverage with sub-limits. And we'll talk about that in a moment. Let's say they're giving you 50% for personal property. So again, with our example, $1 million in coverage, 50% for personal property, that would give you another $500,000 in personal property. And you say to yourself, I wish I had $500,000 in personal property. Okay, you need to reach out to the insurance company or your agent or your broker and say, hey, I don't have that much stuff. How much lower can we make that number for me to save some money? That number, you're going to find more carriers are interested or able to lower than they are other structure. That's actually one of the more common places that people can go to look to lower their premium is by lowering the amount of personal property coverage they have. Now, keep in mind with personal property, I can't mention it without going over a few things that I think are important for you to know. Personal property has sublimits in it. Sublimits, meaning there are limits on certain items of personal property. If you have a diamond ring that's worth $250,000, you might be like, well, that's cool. I've got $500,000 in personal property. I'll get my ring for, give me a check for $250 for that ring. Doesn't work that way. Personal property sublimits are within the policy. You have to look at them because they're different between insurance companies, and they will put limits on policies unless you request them to change them. And those limits are on things like jewelry, watches, furs, electronics, guns, cash, all sorts of things that you might not think about, but are things in your home. Now, again, if you're lowering your personal property coverage, but you still have one or two of those expensive items, you can still get coverage for them separately. You don't need to worry about saying, well, I don't have a lot of stuff, but I have one or two expensive items. That you can do. You can look to lower your personal property coverage, but simply insure those expensive items somewhere else. That's probably a better way to do it as far as getting paid as well as saving money up front. All right. So remember, personal property has sublimits and every policy is different. So you need to be sure that you check with your insurance policy and look on there and see what sublimits are there. Where are the gaps potentially, right? Where's the gap between what I have and what this sublimit stops me at? Because they're there whether you know it or not, whether you look or not, you have that sublimit that is in your policy. Make sense? Now, some other things to keep in mind with saving money on homeowners insurance policy. There's another type of coverage called loss of use or additional living expense. And what that's going to do, that's going to pay money for you to relocate after a loss. Same idea. The insurance company will normally give you a specific dollar amount and say, okay, this is how much we're going to pay you. You might say, you know what? I've got a second house somewhere else, or I can move back in with my parents, or I can move in with friends, or whatever the case might be. You can save a lot of money if you lower that limit of loss of use or additional living expense. Lower it down. You can even remove it entirely in some cases. So those are some things you should be looking at when it comes to your home insurance policy primarily, even though a lot of those are also found in renters policies, in condominium owners policies, all those things. But you need to look at those things because you don't want to pay for something you don't need. And just as importantly, if you have jewelry, art, collectibles, firearms, wine, musical instruments, I mean, you name it, all of those things have sublimits, and you want to insure them, you need to know so you can do what the insurance carriers require you to do in order to get coverage. Don't just assume if you have it, you have the protection. Another quick break, and we will be back. This is Insurance Hour, and I'm Karl Susman.
What if your insurance failed you tomorrow? A wildfire, a burst pipe, a car accident. Most people think they're covered until they find out they're not. And that's exactly why the Insurance Consumer Guidance Society, ICGS, exists. We are an independent, nonprofit organization helping Californians understand their insurance before disaster strikes. No sales pitch, no corporate agenda, just clear, unbiased guidance from licensed experts who work for you, not the insurance companies. Whether you're a homeowner, renter, or a business owner, ICGS helps you navigate premiums, exclusions, deductibles, even California's complex wildfire and hazard requirements. Because the biggest risk isn't the disaster itself, it's not knowing what your policy actually covers. Visit icgs.org to get free education and support. And because ICGS is a nonprofit, your donation helps keep this vital service free for Californians who need it most. ICGS, empowering Californians to make informed insurance decisions.
Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today. We are talking about all things insurance, but before we do, I want to thank our sponsor, ICGS. That's the Insurance Consumer Guidance Society. If it were not for them, we would not be here today. The Insurance Consumer Guidance Society is a non-profit. They don't sell anything. They are there specifically to help you understand your insurance policy. So guess what? They sponsor this show because that's what I'm trying to do. I'm not looking to sell you anything. I'm just looking to give you information. So check them out at icgs.org. If you want to give a couple of bucks, that would be great. Support them however you can. We need them to be able to help you. Now, listen, before I get back and talk to you a little bit more about what we want to be checking on with our insurance policies at least once a year, I want to tell you something because I always want to be sure that I get this in at least once during the show. I've been doing this for 30 years. Yes, that means I started when I was a teenager. Let's just go with that, okay? And I do the best I can to give you the most up-to-date and accurate information that I can. But I'm not perfect. I'm only human. And things do change very quickly. So I can make mistakes. So if you hear something and you think, what? No way. And you have heard otherwise, or you've read something otherwise, then let me know. Send me a note to questions@insurancehour.com or give me a call at 559-656-0317. You can call or text that number and say, hey, I read this, or hey, I heard that. Let me know. I will jump right back in and be sure to let everybody know what it is that I was wrong about. My goal is to get you the right information. It's not about ego. It's not about, well, if I say it, I want to stick with that. No. I want to get you the correct information. That is the goal. So if you hear something, say something. And one request, please don't tell me, well, ChatGPT told me something else. Right. Can we just leave it at that? Even though I have to tell you that I had a client actually send me a question because they put their policy into ChatGPT. And again, I understand that reading and summarizing is a good feature for LLMs, for large language models, but that doesn't necessarily make them insurance experts. It doesn't make them necessarily understand the nuance to things. So not a bad tool, especially if it's going to get you thinking about your insurance policy. You can look at those things as tools to be able to give you some some background to be able to ask more intelligent questions or more detailed questions. Do not rely on them. They are unlicensed, in case you didn't know. Don't rely on them to make policy decisions for you, okay? Wow, that was a long disclaimer. Anyway, let's talk some more about what it is you want to be looking into and looking out for at least once a year to check on your insurance policies. We've talked about renters policies. We've talked a lot about homeowners insurance policies. Vroom, vroom. What about the cars? What about the cars? I know. Auto insurance is everyone's absolute favorite thing in the world. Auto insurance is a heartache. I'll tell you that right now, because let's face it, when we have a car accident, it is always someone else's fault. Now, I'm saying that with a smile because, as you probably have been aware, I like to make fun of people to some extent because it's never their fault. That's one of my inside jokes, is whenever there's a car accident, it's never their fault. It's always somebody else's fault. And I've heard stories. I've had clients that have told us things. Boy, I could write a book just about some of the crazy claim stories. I'll tell you one right now. You tell me who's at fault. I get a phone call. Client says, I rear-ended someone. Okay, well, we initially will start thinking, well, you probably were following too close. Whatever. Let's hear the rest of the story. Well, she tells me it wasn't my fault. I said, well, okay, well, what happened? She said, well, it was raining the other day. I said, yeah. And, it was wet outside and I had just walked to my car and I had walked through a big puddle. So the bottom of my shoes were wet. Okay, I'm listening. Go on. She goes, so I'm driving. I'm doing everything correctly. I'm following the laws. I'm doing the speed limit. Everything's correct. And while I was slowing down, braking, so, when I was coming to a stop, because the bottom of my feet were wet, they slipped off the brake. And so I rear-ended the guy. So it wasn't my fault. I mean, the bottom of my feet were wet, from the rain outside and the puddle I had stepped in. And I remember my jaw just sort of hit the desk because I thought, I think she's being serious. But I didn't know what to say. Understand that, just so you know, that story in general, that is her fault. Her foot slipping off the brake is a mistake. Now, I understand why it happened. I understand how it happened, but that doesn't make her any more or less responsible for that accident. So anyway, that's my quick story on auto insurance and how it's never your fault. Actually, there's a funny article I wrote about it. If you go to kiplinger.com and search for Karl Susman, you'll find it. There's an article there I wrote about how it's never your fault with an auto insurance accident. So what do you need to check with? Let's get back to this. Come on, Karl, let's stick to it. Let's get back to the auto insurance. What do you have to check on and why? At least, say it again, I'm going to say it every time, at least once a year. All right, you're going to need to check and be sure that the people that drive the cars are listed on the policy. I know, it sounds pretty basic. You would assume you buy a policy, it's in your name, you have coverage. But don't assume that you buy a policy, your name's on the policy, and it covers other people just because. Now, I'm not saying that there aren't circumstances where people that are not listed don't have coverage, because sometimes they can, but that's not for you to make the assumption of. Don't assume that you buy it and it'll just cover everybody. Think about it for a second, if that were even possible. When you purchase auto insurance, you're asked all sorts of questions, everything from where do you live to your age, the number of years you're driving. Your driving record is checked. Do you have tickets? Do you have accidents? Have you ever been involved in any type of crimes using a vehicle? I mean, there's all sorts of questions you have to answer, right? Now, that impacts your price. Now, if you were going to automatically get coverage for someone else, let alone several other people, without asking any of those questions, how would that work? It wouldn't work, right? We understand, right, intellectually, when we stop and we give it some thought, that if you want to have coverage, you need to list the people. You have to underwrite the people. You have to have the people you want coverage for to be listed on that policy. Again, I understand there are situations where they still will have coverage, but that doesn't take away from the fact that, let's just say, people that live in the same house you live in need to be listed on your insurance policy. That's the easiest way to be sure that you're going to have some level of protection for them and then you, assuming it's your car, while they are driving the car. Okay? Auto insurance policies insure people and they insure vehicles. If you're not listing the people and you're not listing the vehicles, you're asking for trouble. Again, big asterisk. I don't want to get a lot of hate emails. Yes, I understand there can be coverage if you rent another car. Yes, I understand that permissive use from someone not listed could have coverage. I understand all of that. But I'm here to tell you that gets abused to such an extent that if you have someone that's driving that car with any level of frequency, you better get them listed on that policy, because you are just begging the insurance company to not pay a claim if you've got somebody unlisted, an unlisted driver. Oh, I see that coming on claims. I want to just grit my teeth. Hey, one more break. See you in 60 seconds.
Has this happened to you? You ask 3 different people about insurance and get 3 completely different answers. Your neighbor says one thing, your agent says another, and the internet, a total mess. No wonder so many Californians are confused about what their policies actually cover. That's why the Insurance Consumer Guidance Society exists. ICGS is a nonprofit independent resource created to help you cut through the noise and understand your insurance options with confidence. Their licensed experts don't work for insurance companies. They work for you. They'll walk you through premiums, exclusions, wildfire requirements, and more. Even help you make sense of those long renewal notices that feel designed to overwhelm you. So whether you're a homeowner, a renter, or caring for a property in a high-risk area, ICGS gives you the clarity you deserve. Visit icgs.org for free unbiased guidance. Please consider supporting ICGS with a donation. Your generosity keeps this service accessible to Californians who need it the most. ICGS, here for you.
Hello. This is Insurance Hour with me, your host, Karl Susman. Welcome back. Thank you for being here today. We are talking about how important it is to check on your insurance policy at least once a year. If you have questions, give me a call at 559-656-0317. You may call or text that number, or send your questions in to questions@insurancehour.com. Once again, thank you to the Insurance Consumer Guidance Society for your sponsoring today's show. Now, let's talk more about why you need to check in on your auto insurance policy every year at least. Now, we talked about in the last segment, you might have a new driver that wasn't there before, right? That could be a roommate, let's say, or guess what? A child, a teenager, someone who is getting their driver's license. You're going to need to list them on that policy if you want them to have coverage. Now, auto insurance coverage costs have been going up significantly. And I hear about this and I see it. I pay it, believe me. I understand how and I understand why this is happening. I want to take a moment and explain a little bit about why this is happening. Not that it's going to make you feel any better and about writing those checks for your insurance premium, but at least have an understanding of the why. Now, it used to be you could have a small accident, and a small accident was just that, a little scrape to the bumper. Most people would say, meh, and they would just move on. But as time has gone by, cars have gotten fancier, and just culturally, we've changed. A lot of people now, they have this indignation about if somebody damages my car, I don't care how small the damage is, I want it fixed. I want to punish them for what they did. It is not okay that they did something that caused damage to my car. I understand this over time and this at volume over years as it's been will impact insurance premiums, and it has. Now, on top of that, the cost of vehicles has gotten significantly higher than it used to be, significantly higher. Now, like I had said, there used to be small accidents that would happen. Maybe somebody was backing up, you were backing up too, you both go boink, and you look at each other and you say, grr, and one of you decides to file the claim, the other one doesn't. Insurance companies start fighting back and forth. But at the end of the day, maybe we're looking at a couple of $1,000s to buff out both bumpers, and that's the end of that. Well, unfortunately now, there is no small accidents where you can just buff out the bumper, because now you've bashed the bumper, and that area now has a camera on it. It has a sensor on it. It has LiDAR. It has who the heck knows what. It's made out of some fancy composite that costs a bloody fortune to manufacture. Not to mention, it'll take 6 months to get that part in. All of that costs a ton of money. And we feel that when we're paying our insurance premium. And that's because the insurance carriers are paying those higher dollars. They're paying those higher expenses on claims. And they are, of course, just passing it on to us as consumers. Something else. Now, auto insurance, we know that's going to cover our car, right? We get that. We know it's going to cover, hopefully, the other person's car as well. If you've got all of the right coverage, I shouldn't say correct coverage. If you have coverage for both of those things, then that's what you should be expecting. There's also liability insurance that comes into play. Now, that's going to pay for injury to the other person in the other vehicle. Now, let's say you're involved in an accident and the other person gets hurt. Let's take the good old-fashioned rear ending because everyone's been usually in one end or the other of that type of an accident. Now, the way it used to be, it sounds like an old person would say this, back in the day, in the horse and buggy, the horse didn't care if you ran into the back of him. No. Back in the day, seriously though, years ago, if somebody got hurt, they would go to the doctor and the doctor might say, all right, you need to do some stretches. Maybe you need 1 or 2 sessions at the chiropractor. And that was it. Now, there are much more sophisticated ways that people will go to treat pain. They'll do something called an epidural. An epidural you might have heard of for women that get when they're going through childbirth. It basically is a needle that they put into a part of your spine. They inject a fluid and it numbs, right? It basically cuts off the nerves from sending signals down, pain signals down. Well, people are doing this now if they're having pain after a car accident. No judgment, just a cost factor. Whereas a chiropractor might have cost $20, $30, $40, $50 a visit, an epidural could cost hundreds of dollars to go and have done. And it might need to be done multiple times. So we're looking at a situation again where that same accident that we used to have now is costing more money for the vehicle and it's costing more money for the people, us mushy bodies inside the vehicle as well. And I'll put this out there. I'd love to have your feedback on it. I also think that we're getting softer. I don't know. And I'm not trying to exclude myself from this, but I feel like, again, in the past, you know, unless you were really hurt, you just weren't really hurt. But now people are just the slightest anything. I don't know if it's psychosomatic. I don't know if it's cultural or it's greed for money. I don't know what it is, but I just feel like the first thing that goes through people's mind when they're in a car accident is, what can I get out of this? And maybe I'm a little bit, I'm coming from an interesting position because I hear about claims every day doing what I do, but it just feels like there's an increase, that the general feeling after a car accident is, okay, what am I going to get now? Versus, am I okay? Versus, is there a lot of damage to my car or a little damage to my car? Any accident you can walk away from, they say, is a good accident, just like any airplane landing that you can walk away from is a good one, right? And I feel that we've reached this place where that's just not where people's heads are. I don't know why and how we got there. And if you disagree, let me know. I would love to get your feedback. Give me a call or shoot me an email. Again, the phone is 559-656-0317. Email questions@insurancehour.com. I'd love to get your feedback on this. Are you seeing this as well? Are you getting that impression that people are more interested, or even more, the first thing they think of when they're in an accident is, what's coming for me? I know that when somebody calls me and says they were just involved in an accident, my first thought is, are they okay? And I'll usually say, are you okay? Because that's the first thing that goes through my mind. It doesn't seem to be universal that way. And I would like to know what you are seeing. Again, I am probably getting a slightly different vantage point doing what I do for a living, but I'd love to hear from you. So please do give me a call and let me know your feelings are on this. I want to talk some more about car insurance, and then 1 or 2 other points I want to try and hit. Remember, the whole mantra for today's show is you need to take time at least once a year to visit your insurance policy, review your coverages, talk to experts, talk to your agent, talk to your broker, talk to your insurance company. Just don't renew and move on. Take the time. You will thank yourself later in the event you need your insurance policy. I promise you that. Even though I hope you never, ever need it, if you do everything you can preemptively to be sure that when that time comes, you have the right coverage and, more importantly, the coverage you thought that you had. This is Insurance Hour. I'm Karl Susman. I'll see you in 60 seconds.
Have you ever opened a letter from your insurance company and felt your stomach drop? A canceled policy, a sudden premium spike, a long list of terms no one speaks in real life. Most Californians don't realize how fast their insurance situation can change until it already has. That's where the Insurance Consumer Guidance Society steps in. ICGS is an independent, nonprofit organization that helps you understand what's really going on with your coverage before it becomes a crisis. No sales tactics, no company agenda, just licensed experts who explain your options in plain English. From homeowners and renters insurance to wildfire zones, hazard requirements, and everything in between. So the next time a letter arrives and you feel that jolt of panic, you don't have to face it alone. Visit icgs.org to get clear, reliable guidance you can trust. And because ICGS is a nonprofit, your donation helps keep this vital service free for Californians who need it the most. ICGS, always by your side.
Hello. This is Insurance Hour with me, your host, Karl Susman. Thank you so much for being here today and talking about insurance and your insurance policy. And say it with me, how important it is to check your insurance policy and say it together at least once per year. Please say it again, once per year. Please. That is the most important takeaway. If you take away nothing else from today, please take that away. Insurance policies need to be updated just like everything else in your life. You can't set it and forget it and expect it's going to be exactly what you want whenever the time comes you might need it. Now, let's jump back in. We are talking about car insurance and accidents and costs and why auto insurance is costing more. Before I move on to one or two other things, I want to give you a few ideas of ways to save money on your car insurance. Who's not going to want to hear that? So the first thing is, of course, deductibles. We talked about this when we were talking about home and renters insurance and things like that. Raise those deductibles. I know you might say, I don't want to have higher than a $500 or $1,000 deductible on my car. But listen, that's going to make a significant difference in your premium. Now, you might not like it, but it won't take you long to have that difference be made up in your premium. If you go from $1,000 to a $1,500 deductible, it might only take you 1 year of lower premiums, and that difference of $500 will be made up. It might be made up in the first 6 months, depending on your policy. So don't be afraid of those higher deductibles. You don't want to put in small claims anyway. And in the event somebody else is the responsible party, then your deductible typically won't matter anyway. It's going to be paid for $1 by the responsible party. So keep it in mind. Maybe look at it as an incentive to drive safer. The deductible will typically only come into play when it's something that you are responsible for, right? So look at those deductibles. Other things you can look for, be sure that you're not carrying some old coverage that you might have needed. Maybe you were driving as an Uber driver for a while and you added that to your policy, but now you're not doing it anymore. Get that off of there. You might have been in a situation where you were driving up and back to the office. Can you remember? Do you? And now you're working from home. Well, update that with your insurance company or agent or broker, because you are going to be paying a higher premium if they assume you are driving up and back to work every day than if you're sitting at home with your poodle and sitting on a computer all day long, right? If you're in the car less, you're going to pay less for insurance. If you're on the road less, you're going to pay less for your insurance. You are less of an exposure. You are less likely to have an accident if you are driving less, right? Makes a lot of sense to me. So make sure you update your vehicle usage with your insurance agent or broker or insurance company. That's a big one. People change jobs and all of a sudden they're paying for insurance premiums or types of coverage that they just don't need anymore. And again, your agent or broker doesn't have any way of knowing. Nobody does except for you, right? What's the mantra again? At least once a year, check on your insurance policy and go over these things. Write these things down. They're important. Now, we're going to be wrapping up the show in a couple of minutes, so I want to do like a quick lightning round, if I can, of types of coverage that you want to remember to check on, even though you might not realize it's important that you do that. Now, I'm not going to go through what you need to do or why with each of them, but I'm going to rattle off each type of policy that if you have it, you definitely want to check in on it at least, say it with me again, at least once a year. All right, we know homeowners insurance at least once a year. Condominium owners policies, right? The policies you have when you live in a condominium complex, check that at least once a year. Renters insurance, you're going to check that at least once a year. Your auto insurance policy, I know you're going to get sick of hearing this, but I want you to remember it, at least once a year. Personal umbrella policies, we didn't talk about them today, but you need to check those at least once a year. What about life insurance? You betcha. Check that policy at least once a year. I won't tell you how many times I hear people have gotten divorced. The beneficiary never got changed. It's still their ex-wife. They want to change it. They can't. It's a disaster. Check those policies at least once a year. Health insurance, those policies are changing like the weather. If you're not checking on those, you are definitely going to be confused about the coverage you have and or paying too much money for it because they change constantly. And the way the regulations work on health insurance, the carriers make changes and you'll get a stack in the mail that outlines some of the things and you may understand it, you may not. Good luck. But either way, I want you to understand that you need to check your health insurance at least once a year. Disability insurance. If you have a disability insurance policy, definitely check that at least once a year. If you've changed occupations, guess what? You're going to have to update that policy. Otherwise, you might be paying money for absolutely nothing. Check that disability insurance policy at least once a year. Are you getting tired of that yet? Are you? No, you're not? All right. Well, we can. I can definitely keep going. I've got plenty of these things. What else do you think you need to check on? Come on, tell me. If you think I've missed any of the big ones, shoot me an email, questions@insurancehour.com. Call me, text me, 559-656-0317. Home insurance, car insurance, personal umbrella insurance, disability insurance, earthquake insurance, flood insurance, long-term care insurance. What else is in there? Condos, renters, flood, all of these things. Every type of insurance policy you have, you want to check on it at least once a year. And with that, we will bring this show to a close. I appreciate you taking the time to be here with me today and learn. I'm interested in hearing from you, so please give me a call or a text at 559-656-0317 or send in your comments to me at questions@insurancehour.com. Please also visit our sponsor, the Insurance Consumer Guidance Society at icgs.org. Let them know that you're listening and let them know they are also helping to make a difference. This is Insurance Hour, and I'm Karl Susman. I do want to thank all of you for taking the time to listen today. I know insurance is not necessarily the most sexy concept. It is important that you understand what it is you're looking for, what it is you think you're getting, and finally, what you actually did purchase. You simply need to know more than you used to. Things are more complicated. If you have any questions, please reach out to me directly at 559-656-0317. You may also send your questions to questions@insurancehour.com. Informing, educating, and entertaining, one policy at a time, this is Insurance Hour. The show is dedicated to Shamrock Papa.